What's up, everybody? So this is actually part one of part two for the weekly outlook video. So if you're in my Telegram group, you probably already saw it, and got a little cleaned up by now. So I'm going to show you a live accelerator call that we did, and I go over what I'm looking for the week, but also in terms of using my EA and the strategy and how to set that up on my funded account, and for the people that are in our group on their funding challenges. So I wanted to shoot this video first. So like in the next video, I just got off a hot yoga class and I didn't have time to like shower before the video because I said it was at 9:30. So just remember that, right? So I don't show up for all my live calls looking like a scrub, that's for sure. But that being said, here in this video, I wanted to make this because you'll see in the live video, and you might be watching this and be like, damn, dude, that's pretty indicator heavy. And I wanted to shoot this to show you exactly why that is. It's not like we're just relying on the indicators and that's all we do at anything like that, because that's definitely not the case. But the way the bot works is we are identifying the trends, and all the people in our accelerator group, it's a high level group of traders in there. And, but the thing is for the tool that we're using, the EA, the way that it works, and in the video I'm going over how we can get the best ideal setups for on a 15-minute time frame. And the way the EA works is it's taking trades via a semi-automated trading system that where you are still in control, whether you're taking buys, whether you're taking sells, whether you're taking buys and sells. And you can see here, so as an example, this is a great example. This is EURNZD here, and the way my EA would be designed would be we would take a trade off of this. You can see the momentum here, and then also the CCI, which you'll see that in Trading View, and this would be our entry. Now you can dial down, and this is where it's unique. You can dial down the risk management to a point where there's where there's a buy sell function plus stop loss to entry, and all the different parameters that you would need to really get dialed in order to pass your funding challenge, that's what so many people need help with. And trust me, it is very hard to continue to be profitable day after week after week after month after month manually trading. In my opinion, having some sort of automated system that's going to assist you in doing that is crucial. So these are some of the settings that I would use and what I'm looking for. So like here, this is a great example for EURNZD, right? So we're on the 15-minute time frame, and so like using my strategy, and if you already are familiar with the momentum and you've already been in my group, the whole point is to get in so you can trade with the trend, not counter trend. I don't know about you, but I've mentored a lot of people, and the number one problem, including my own trading, a lot of times is going against the trend. So how can we go in with the trend? This is crucial. And then on top of that, get the best risk to reward. It's all about the risk to reward, which you hear us talking about in the video, how to nail that down. And then from there, go into where you are being able to do it again and again and again, and then get out of the trend when it ends, right? So because the ranging markets can be great sometimes trading in a range, but you want to have that big smart money behind you, right? So so here's EURNZD, right? This is the 15-minute time frame. Now if I was going to go over to the you look at it on Trading View, got Trading View set up here. Here's my Trading View and EURNZD. But now we're at an hourly time frame. We'll take this down to an hour. And so this is what we're looking at. And so the Bollingers, because we're looking at 15 minutes, and you'll hear us talking about this on the call. So what's going to happen, and I think this is a great setup for me, I'm going to go short here and have a short bias. So now I don't have to find the entries so much because my EA is going to take the entries for me. I have to just be able to determine the bias and then operate the system as it goes. So just to be clear, because if you're in my Telegram, you're like, dude, that's a lot of indicators there. You know, really, it's not. You know, we obviously, if you've been following me long enough, you know, there's no problem stripping this down and doing some good old-fashioned price action analysis. But the thing is that, like, if you stay in this game long enough, trust me, you're gonna just be like, dude, I just want this to be as easy as possible, and I want to make money. I don't care about the pride of like, oh, I have to get the perfect order block or whatever it is, dude. Trust me, I hear it all. And that's kind of the argument out of people. But the thing is like, I'm here to make money, and it's not a pride or ego thing. And I don't even care about who's, you know, people, I don't know, people wrap up their identity with trading. And so what I'm here to do is to make money myself and to help the people in my group, specifically the people that are in my accelerator group that are getting mentored by me, be able to do the same thing and be able to do it consistently. So when you see that, when we're talking about this in, that'll put this into a little more context. The previous video I shared, what I'm going to do is edit these together. So now just to go back to where the bot will be operating from, and how I have this set up is via a trade copier. So I have this going to multiple accounts. Here's a good example of a short little buy scenario, momentum, bullish, and then we're looking for pullbacks here and looking for pullbacks with this trend, and then being able to take entries off the trend like this, right? So this is a short little pullback. We would have gotten taken out at entry, but there's a partial profit parameter, so you can, it'll take partials for you. And just got some company here. My brother just stopped by, and so I am going to hop off here. And be sure when you go through and look at this, you keep that in mind about how this is actually being applied, how this bot it's not going to make it easy. There's nothing about that, but it's going to make it so you're not like, I don't know, man, God, this is so frustrating, because now it just becomes a matter of getting consistent, dialing in your risk management, and then of course, you know, having a good mentor along the way. So I just wanted to make this video to put that into context. And so now you can see the idea is okay, so we're bullish. Great, I can see that. Now, where can I get in and where can I get the best entry? And you'll see that is a long video, but I wanted to, you know, give you a little sample of what it's like, you know, on the live calls when we're going in the morning, typically hour and a half, 2 hour long calls. And, you know, that I don't know anywhere else where you can get such in-depth mentorship and just talking about the market. So check out the next video. I appreciate you, and I hope to see you in the group. A signal so that you know that the trend is about to change, which, as you've starting to get a little more experience with, you know, the EA and stuff, that's the big part. It's like, when do you change your bias? And that's the big key to the puzzle that Steve and I had been working on for quite some time. You want to talk about it a little bit, Stephen?
Yeah, okay. So we're looking at a 60 moving average for what would give us a good indication that that the trend was coming to an end. But I'm still using the 1 hour as a bias to look at the overall trend. But when we are then crossing, let's say we're in a buy, when we cross under that 60 moving average on the 15-minute, which the entries are taken off of, that's when I apply the EA in a different way. So when we are underneath that moving average, but the 1 hour bias still says long, then I'm instead of a 2-to-1 or 1-to-2 trade, we're going with a 1-to-1, because the risk is there that we might be turning, and actually to get to your 1-to-2 take profit, the chance is going to be diminishing. So we was in some positions last week, you know, on GJ. I think we had, you know, quite a few break-even positions with GJ on Thursday and Friday. Now I don't know where we were with the moving average from that, but you know, I think by adopting that stance, we'll definitely get some more take profits, albeit a one-to-one, but we'll definitely get some more take profits towards the end of the trend.
I think it was right, this section right here, of course, when it was in a good range.
Yeah, and also not only do we then go one-to-one when we are the wrong side of the moving average, we also apply an earlier stop loss to break even. So, you know, if you, let's say you were trading 20 stop loss and 40 TP, or we're going to move that from a one-to-one to 20-20. And then we might say we move stop loss to break even at 10. You know, so the stop loss is 20, but we move stop to break even at 10. And I just think, you know, by using a 60, you know, we're using a 60, not an 100, because the 60 is, you know, more reactive on the 15-minute time frame where the entries are coming from, and you can see when we might be getting that change. But also, as well as that, you know, looking through some of the back testing, as well as that, when we are in a strong trend and we are the right side of the moving average, I'm then looking at, can I get more than 1 to 2 out of the trades? And most of the time I definitely can. You know, I think we can get, you know, somewhere like 1 to 2.5 out of when we're in a strong trend. You know, there's easily more downside and more upside looking at the trades. So yeah, yes, we will be only taking 1 to 1 on some trades, but we can offset some of that by getting more than 1 to 2. So yeah, that's in a nutshell what kind of, you know, I'm looking at. Yeah, am I going to change next week? No, because I really a believer that if we're in, you know, halfway through something, we should let it run its course. You know, we can't really evaluate what we're doing at the moment if we start tinkering with it too much. But I think I said right from the start that the one thing I was looking at doing was trying to eradicate some of the losses. So that's kind of what we're doing and what we're talking about now. Hope that makes sense.
Yeah, it does. And so some of the stuff that I was talking about, first of all, just going, maybe just backtrack a little bit about what we might even just think is going to happen next week, you know, and then I'll show you my, just like in terms of analysis and stuff. So next week, obviously, or this week is Thanksgiving week. So Wednesday, it's kind of up in the air. I mean, we do have, it's the day before Thanksgiving, so it could be kind of a toss up. Either nothing's going to happen, or we do have GDP and we have price index plus FOMC meeting minutes. So I think Tuesday and Wednesday are going to be like Wednesday, you know, I mean, I guess, Pete, what's your experience with the day before Thanksgiving in the banking world? It's kind of a toss up, but you know, there's a lot of data here. It could get pretty crazy. Is what I'm thinking.
Yeah, there's usually, so to be honest, there's usually not much data, you know, news coming out the day before. So it's usually pretty quiet, but being that there is some news this Wednesday, I think by 12 noon, no, I mean, the FOMC minutes, but you know, the guys in New York by 12 noon, I think it can be done. So I honestly don't see maybe a big move happening off of that. But I will say, I remember this earlier in my career, sitting on the desk, I had to work Thanksgiving morning and it was nuts. I mean, so, but there's no liquidity. So right. I guess there's two ways to look at it.
Yeah. And that's where you gotta be careful. So I think it's going to be interesting. Tuesday and Wednesday are going to be I think that's a good point about Wednesday by noon, but maybe, you know, the 2 hours right after the GDP drops might be something to watch. So one of the things that I've been looking at, of course, you know, we kind of took it both ways, looking for, I guess it was last week with, you know, Stephen pointed this out on Tuesday's live call that, you know, having the long short bias, and he was referring to GJ, but this is a good example for Aussie yen, and you know, it's still going against us, but now we're still trending downwards. So on the 4 hour, this downtrend's kind of just getting started. So really the question is this going to continue? Is this going to get a pullback? And, as a whole, I would say I'm pretty, bearish risk. It really looks like it. Here is the US 30. Unless we kind of make create some sort of support here, and that's it. S&P 500 holding up better than US 30. NAS all-time highs, but there's not much gas left in the tank. It looks like, but I could be completely wrong in that. It is the NASDAQ, but it really seems like things are going to start potentially. I have a feeling that we're going to get something's crazy. It's been too quiet too long right now. I feel like something crazy is going to go down going into the holidays. So that being said, I mean, it's not like I'm trading off a hunch, like I'm a detective or something, but I'd see the dollar pushing higher, and it sure looks like that way. The commodity currencies potentially continuing to move lower. Aussie, New Zealand's has been holding up pretty resiliently for sure, but still going sideways. So that's kind of my bias overall. Euro, which one were we looking at? Euro Aussie was looking pretty promising towards mid of last week, and we're kind of just going sideways here. Stephen, have you kind of affirmed a bit of a bias for the upcoming couple weeks?
I think we're still long for Euro Aussie as we move into this coming week, and then we'll have to see what's going on. There's quite a bit of noise coming out of Europe at the moment with protests around lockdowns in Austria and Holland.
Austria is full on lockdown, mandatory vaccinations, right?
Yeah. And Rotterdam, there's protests there as well. So in Holland, so see if that does anything to the euro. But it depends on how big any, if at all, sell-off is in the markets, because the Aussie should be weakened significantly if we have a big sell-off. So euro, regardless of probably what's happening, euro will probably rise against the Aussie if we start the week with risk.
Right. And a little side note, I sent this gold trade. I mean, I'm glad I got out of it because it spiked up both ways, but nice little drop off there yesterday to end the week Friday. So I'll throw gold on here just for, this is kind of what I was looking at using. So if already have, that's my bias for the week. That's kind of what I'm looking for. Big, more on the long side dollar, although pound is kind of looking like it's potentially gearing up for another rally. So we'll see, but I guess it really doesn't matter. And this is the part about using the BOTAs. You really got to get in and trade what you see rather than what you think, which is, well, easier said than done. But going through here, what I'm looking for, and still using the momentum, and this is basically the momentum setup here, the 200 SMA. I do have the envelope out here, but that's it starts to get a little too busy. It's already busy enough as it is. But throwing the super trend on here, and Stephen found out something pretty similar, is that or interesting, is that the super trend matches for the most part. It's probably made off of it, the cross of the MACD, right?
Yeah. On the 1 hour, which I'm using the super trend, I've started to use that on the 1 hour because it's just easier than what I was doing with putting boxes around buys and sells. So occasionally the super trend would get me into a bias change earlier. So I think there is a benefit in using that, and it's simpler as well.
So what I've been doing here back testing is this is GU, have the super trend on there, and putting the bot on, so it's taking buys and sells on the 30-minute, even I like the 30-minute and the hourly. Stephen also does the 15-minute as with the same strategy, but you can go up here and use the Bollingers and put it on whatever time frame. So here I have it on a 15-minute time frame, length 20, standard deviation 2.4. And, you know, I've been going through, and this is what I'm going to try. And just to kind of cut out a lot of the noise. And this EMA, by the way, is what is set on the 15-minute time frame, because on what Stephen was talking about was on the 15-minute time frame, if it's moving, if the price is below here, so the Bollingers and the EMA, I have it on the 15-minute time frame or whatever time frame I would turn on and use the EA. But for operating it, just so I can see and just really kind of keep everything on one chart here to cut out all the noise and the back and forth. Now, what I'm looking for to really simplify it is the 200, because I did like even had the SMA off of here, the 200, but if you do that, I mean, it becomes easy to lose track of where exactly in the trend or the overall bias. I talked about on the call Thursday. I really like the bias. Hey, he's too smart, man. He's too smart. He'll open those doors. He's not gonna go too far because I have a bunch of food right here. But yeah, so here is the SMA, and if this lines up, super trend, bearish, momentum. This is a 14 momentum, by the way. I have it on just like the standard settings because it is useful now to watch the volume profile to, you know when you're in and out of move. So all this the same, and this is lining up bearish. That's my bias, and I'm gonna take it. Now we're kind of above the 200 or the 60 EMA there, but then we get a nice touch in the Bollinger, and then our EA would have ticked us in on a trade. Now let's see, I'll put it in on like a 1 to 2, and let's see. Which you were doing something interesting as well, like leaving the like just using actually the super trend as like put your stops above or below it. This is essentially using the momentum strategy. You can hear this or see this would be a potentially stop loss at entry, but it would just rack up these different trades right here. Here's another one. Potential entry. Yeah, we crossed the center, so that would have been an entry.
So Clay, is the line of the super trend significant, or the placement of that super trend line?
Not really. I mean, if you wanted to, you can adjust the stop loss according with it. It just like, because like obviously when the market is dead, it's easy to be like, oh yeah, here's the line. I mean, this is what it looks like right now, right? So
the placement of the dot where the super trend starts is significant. I don't know. I think it might be based on the ATR, because the way people normally use the super trend, they're not using an EA like we are, but they're using it just to place one entry and going short or long off of that and putting the stop loss the other side of that dot, or sometimes there's a flag saying buy sell. But that's how the super trend is normally used, the stop loss the other side of it.
Yeah, and with this, like you could keep this potentially just a backtrack, and if we see the retro, like see the big picture view, you could, if you get a position, if you wanted to. Now it's easy to say this, be like, yeah, you could just remove the take profit and hold it, or set the trailing stop, but as we all know, that's the hardest part about this. Getting the entries isn't hard because it's going to do it automatically for you. Holding the trade to where you get like a 90 pip take profit, well, that's a different ballgame. But you can see here, this all lines up in the momentum now. Of course, same thing that I lay out in the EA training. The way I use the CCI, if we get to this extreme level and start to drift upwards, it means that the potential for a pullback is definitely there. So which happens, you can see it pretty cut and dry, but this is another entry. And this is the good point, what Steven's talking about the 60 though. Now we're starting to range here. And prices, I would say this is Asian session too, so that's not a shocker. Now you can see it changes here. So for me, the safe move would be to just turn it off. But like if you did get triggered here before in a sell position, well, you could, if you wanted to, cut your losses at 10 pips there, and then wait until
Look at that. Look at those candles that were below the 60 before the drop. So keep going. That's it there. So you're on. This is the 1 hour, isn't it? So you've got 1, 2, 5 or 6 hours there of where the super trend is still telling you bullish, but you're below the 60. So that's where you should probably look to apply a different setting in terms of maybe a take profit or switch it off,
right,
or stop loss to break even really quickly.
So
try and give yourself
if we get it. So now we're getting a lot of mixed signals, because here we're green, but obviously momentum is still bearish. This one crossed back over, and the CCI is below that center line. And I'll show you an example of that, how that's going to come into play for this in a minute. But then once we drop back below this EMA, it's the 60, and then we turn here. Now you wouldn't have gotten ticked in if you turn it back on here. That would have been a great trade, and you could have slowed this down to 34, and you would have seen that this is pretty much a momentum trade. If I turn the envelope on just from the momentum training that all y'all have gone over and know now, look, it's a retest of the envelope. So you can always be like, wait, get your bearings here, take all this stuff off the screen, be like, oh, okay, cool, I know this from the momentum training, and this is a momentum trade. You would cross back above the center line, momentum drops down, and well, that's a massive 190 pip drop. But we are focusing on the EA side of things. So here, and this would have been a entry potentially right. I don't know if that touched, but this definitely did right here. Here, if you got triggered going the wrong way and you started to drift over, you might want to think about exiting that trade early to save yourself. Now, of course, once we start to switch back, and actually the bottom momentum here, I should say, I've also been playing around with 50. So having this on a 50, so then it's like even a little faster too. So it's not like going to take so long. So maybe potentially you could go long right here. Now, knowing this is where Steven's EMA strategy, we get back above here, knowing that this could be just a shorter pullback. And if you were going to take a long right there, well, have a tighter risk to reward, shorter take profit, faster stop loss to entry. And then now, but here we are, we cross back here, cross back bearish, trend changes. None of these get triggered, but you get a trade right here, 60 pips. There's another trade. And so just to sum that all up in a nutshell, we're looking for a triple confirmation between this, and this, and then the CCI to, below that center line. And that is a trifecta, which is like, all right, bearish, right? And then you could put it on shorts only. Now, this is an example of, yeah, you have some trades in there. So depending if you want to go counter trend, now we're drifting back, and it looks like the trend's starting to change here. And we're bullish, bullish, bullish. Now this is why I still like, because I was back testing it with the SMA off there because it's like, man, that's a lot going on. But if the SMA is going right through the middle, there's a lot of indecision there. It's still, I would say, in a range and not confirmed bullish or bearish. So like where we are right now with the, I would probably consider, I wouldn't even do this to play it safe, because I'd rather just keep it, have it so it's a clear cut indication of like bearish, bearish, bearish. And look where we are on the CCI, right? We're right in the middle there. Now, if now we start to trend upwards, which it really looks like it's going to, that could be a really great example or great opportunity for a turnaround. So let me find another example. Does that make sense? Like here for Euro, this would be a good example too. And sometimes it looks like this happens a lot. So you might want to figure out how to get this trade in there, because that would have been just a killer if you're trading EU with it. But like 200 super trend, I do think we're coming to the end of this potentially. I mean, this has been moving downwards for a long time, but you know, there's going to be so many opportunities and examples to, like, now say we turn it on shorts here and the EA is taking positions to the short side, and then we start to drift back above the 60 EMA on the 15-minute time frame, and then the CCI is drifting upwards, and you know, we'll have a lot more indication that the trend is changing, and either just get out of it completely, look for better opportunity, or if you're sticking with just like the 4 pairs that you're trading with, depending on which kind of strategy you're formulating for yourself, you know, really focus on that one pair that's like, you know, if it's that really looks ideal, like CAD Swiss still kind of going sideways in here. So but you know, it's probably in the best example because it's a Swiss pair, but I just kind of picked it. Does that when I shared that with you yesterday, here's a good example of like the end of the trend turning around, and this is GJ, and this is where we were last week. So, you know, big bearish move here. There's always, if we get back above this 60, I mean, look, there's always this move, and that's before the trend change. Do you see that right there, Stephen?
Yeah, that last push.
Yeah, it's like, man, how do I get in that one? Maybe if I can speed this up just a little bit. No.
Yeah, that'll be that's the ATR, so that would just tighten the super trend.
Right. Well, you know that the one right before it is
yeah, the only way you'd catch that probably is by putting the super trend on the 30 minutes or the 15. But the flip side of that then is that it will be too reactive and you'd miss some entries.
Yeah, and I mean, I'm more on the side of like, I would rather it be just a little bit.
Yeah, I think the trick is to, I think for me anyway, what I'm looking at now is to stay in the trend. So, you know, use a bigger time frame to keep you in the trend, but know when there's more risk for staying in the trend, and then you know, switch off, or as I said, lower your take profit, or tighten your stop to break even. I think that gets the best of both worlds. Right.
And so, you know, and this is a good example here of it changing on us, GJ. You know, we get back above the 200, about the envelope there. It's like, oh, okay, yeah. So I mean, I'm still going to use it just because I'm toggle it off and on, but we get back above here. Here we are. bullish, 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 and like the CCI, we're above the center line. Already, we know that the phases that the market's going through is expansion phase, contraction phase, and then another expansion. And then like, so we have, here's the big expansion and we start to just contract sideways. And this isn't even the biggest push, but I mean, you flick us on to a buy entry, even if you waited to where it all lines up, you're above the 200, super trend bullish, momentum's bullish, bullish, bullish. It's on, like, that's the confirmation. And you take it on here, right here, and boom, here's the pullback on the fifth. Like, we're looking on the hourly, but this is the 15-minute, and there's a trade. You get ticked in on here. And then here is a little more questionable, right? And this is where Steven's, what Steven's sharing comes into play. Like, we get back below the 60 EMA, and yeah, you get a trade triggered in here.
Yeah, and we did trigger trades there on Thursday and Friday, Clay, which went 1-to-1, and
Right, yeah,
you know, across that phase where that super trend red line is level, you know, across that phase we had about 5 GJ trades that went 1-to-1. We took a small partial, we broke even, but then it turned on us and we got taken out at break even. You know, if we adopted the 1-to-1 process there, we would have probably had 4 or 5 profitable trades.
and what do you think it would be ideal? 20 pip, 25 pip?
Yeah, I think you know, if you look at what my settings are on GJ, I think it's a 23 stop loss. So
Okay.
you know, maybe I'd say 25. You know, 25 each way, 1-to-1, but break even. You know, stop to break even after 15 pips, maybe. Yeah, yes, you'd get a lot of stopped out at break even, but we're playing the risk management game because we know that there's more potential now that that's going to turn, and it did. It turned, dropped like a, you know, Friday morning crashed.
So does that make sense? I think it seems like a really obviously, you know, because like with GJ or Aussie CAD here, and GJ is a good example though. Like, we know, and y'all know now that the EA will take trades. Obviously, it's not now. It's just like we don't have to take every single trade. We can just find the ones that are ideal and the, you know, most ideal setups. Whatever your pairs that you're looking at and you're going for, then like.
Also, it's probably worth noting that when we do get to an end of a trend and we cross back the other side of that moving average, the bands tend to tighten as well, and you pick up trades quicker. And if it goes the wrong way against you, you know, depending on your max risk, you know, you kind of have, you know, some quick successive stop outs.
Yeah, so I mean, this is a great example too of that. Like, there's that one last push. Now, if you're using it on, that depends if you have the EA on what time frame you're using on. A 30-minute too, that would have hit too. See the hourly. Hourly, that would have been a great position as well. The hourly though, if you had on the hourly, and here with these settings at least, you would have missed some of these GJ trades. Now, remember, if here's the 30-minute, this one would have ticked in, would have been great. But 15-minute, now if you're using, I think if you're using it on a faster time frame, depending on how many pairs you're running, I still think that, you know, 4 is the max. What do you think, Steven, on a 15-minute time frame? It depends. You can lower your risk, but like, once you have it can be a lot to handle if there's a bunch of different pairs going at once. You're like, oh God, you know.
Yeah, if you're using super trend on a 15-minute time frame, you'd be flipping your bias very often, you know. And if you're kind of full-time trading,
no, I mean, looking at a 1 hour, but having the EA on running on the 15-minute time frame.
Yeah, which is what I'm effectively doing. Yeah.
Yeah.
I have been flicking between super trend on 1 hour or 30 minutes and taking 50-minute entries. I'm still staying with 1 hour for the minute, but yeah, I think for me it's between one of those.
So yeah, I mean, let's go through here and just this is one way to do it. And I have this in the accelerator training too, because this is what I would do with the momentum. But I do think we're kind of coming to a close here for Aussie CAD, or might range a little bit, but you know, below the 200, below the 60, bearish, bearish, bearish. Looks pretty decent. So what you can do is go over here, set a flag, and then just go down the line here. Stuff that does look like it has a potential. Aussie Swiss looks like it has some potential here. So it's pretty clear cut, bearish. You know, you can see that where the Bollinger, this would have been a great trade. That would have been a 0 drawdown trade from the EA right there. So this looks like it has potential. Remember, we are coming this. I think the Aussies or the Swiss pairs are about to turn around. So this might be one I'd be hesitant to take. So you could just take the flag off of there. Aussie yen looking pretty bearish. So could go. Now, remember, if we get above that 60, or the 60 starts going in the middle of it, well, you know, like this, right? This might turn around, but you're probably better off waiting for some sort of rally and pullback. This might be good on the long side, but you know, it hadn't changed. But this is something where like this would be ideal, right? That would be ideal. Once we start going in the middle, you might want to sit that one out. AU. See you, Stephen. Yeah, we'll see you in the chat.
Cheers.
Thanks for hopping on, man. So yeah, and so you can see here, bearish, looking pretty bearish, looking pretty bearish. So this is just about as simple of a way to really just, all we want to do is have these multiple confirmations here, and then it becomes about your risk to reward using the EA, your psychology. Obviously having a bot, you know, you have to, what's going to create bad psychology with it is if you turn it on to where it's like doing, you know, above 0.5% risk, you know, is if you're doing multiple pairs, it's going to get you in trouble on a challenge or on a funded account. Now look at this, but look at this entry here. That would have been just a awesome entry, and you know, about 40 pips depending on what your take profit is. But this one, these flags are super useful too to do this. So and just going down the line, and this is a great way to prep up for the week. So what do you guys think about this one? I think it looks like it's pretty, and you know, like in a range bound, because look at the 200 SMA. All of these Swiss pairs, I think, are about to reverse, and Swiss is about to see some serious weakness. So that's one I would just leave alone. CAD yen looks decent to the short side, although we are getting down here to pretty extreme oversold conditions. So but it would be short bias. Swiss yen, like what I just said about the Swiss, I think it's going to definitely apply for Swiss yen as well. So but this one looks pretty this one looks bearish, right? Now this is a good example of us starting to go sideways, and then it moves against us. This would be where you might want to just cut it off early, wait till we get back up top, and then, you know, take it back on. But right now, we keep the bearish bias there. So Euro Aussie, we're right in the middle of this 200 SMA. So I would potentially say, leave it alone for now. Like, because we can always zoom out, and I think you always should, and just like, hide all the everything going on here. But we were in a huge channel starting to turn around. I think we're trending up a little bit. So, but with the 200 SMA in the middle there, you might run into some problems. So might be one you want to just tick off there. EURNZD, this looks like it has a lot of potential. We got a nice little slope on the 200 SMA. We just now turned on super trend going bearish. So I think for our EA, we just kind of pushed up here. What I'll do is like tick back and forth between like a 200 momentum just to see. So we're still pretty bearish. And just right under the center line on the CCI here. So, what would be ideal then is obviously get some sort of push back up here. We get a trade triggered from our EA. And then we move to the downside, but they're all confirming. And that is a simple way to confirm a bias. So then I just go over here and look at all the bearishness in the markets right now. Let's see. So EURNZD, Euro Swiss. I'll just leave this one alone. I think we are we are bearish here. So I said that because I would leave it alone because I've already, I know how far, this thing's been moving down for quite some time. So probably just leave that one off. And Euro Pound, I was looking at this last night. This is a good example of here would have been excellent opportunity. We're below this, well below the 200, big sell off here. This would have been a trade that got triggered. And there's a lot of opportunities here for trades. So, but we just now moving lower. So it's probably pretty extreme. I'd say it's extremely oversold to a certain degree, but at the same time, this just changed. Momentum's confirming, and we're just right below the center line for the CCI, which by the way is the 160, same thing that I laid out in the Jarvis training. So the EA training. So boom, bearish. And this is what I do with the flags. If you see these here, when I'm really on top of my game, I change those over so I can kind of just keep up with everything and see what everything's doing. But like, if you look at these, this downtrend, man, a lot of trades here that would have gotten triggered. Let's see. So, because I know John was asking, about just finding a bias and how do you know when to turn it on and off? And so I think this is a really, really simple way. Like I just said, though, you really don't want to, you want to be careful not to overdo it. Let's put it that way. And so, find like, let's see, EURNZD. That looks like a really good example. Swiss yen does. Aussie dollar potentially as well. Especially if we're moving into just more extreme Aussie bearishness. So those are ones you could really, really zero in on and have a game plan for the week. Euro New Zealand looks great too. Now, and that's the thing, if you did get a mixed signal, you're either like, now if you're just like, these are my pairs, Euro New Zealand, GJ, dollar CAD, and NJ. Well, then you could be like, those are what you're going to focus on. then you could be like, oh, okay, so if you're in New Zealand, you could have a template or a setup for even like a scalping strategy if you're getting mixed signals here, or just stay out completely. Like, you know, you're not going to lose the trade on the trade that you don't take. But we're just looking for just multiple confirmations here, and you know, you could sleep at night being like, well, that, you know, it's not going to lie. This is exactly what's going on. So, but you always want to zoom out, see the big picture. You know, Euro New Zealand might be coming to an end of this this downtrend. We're just kind of moving sideways here. Even go to a daily. Well, I mean, on the daily chart, it looks like we've blown past all the support here. You'll see that. So Euro New Zealand could be moving. I mean, if we just, there's our supports, broke through, retested what was support, now resistance. And, you know, next major supports are, here's next area of interest. Right there. I mean, on a long-term basis. So if you are trading, you know, these are my 4 pairs. This is it. You know, look out on that daily chart and then be like, oh, okay, now I see we have some potential to move lower pretty quickly. So anybody have any questions about that?
Yeah, I got one, Clay.
Sure.
So you're saying the 4 pairs, but that's suggested on a 15 minutes, right? What if we want to do like in 30 or 1 hour? What would your suggestion be? Maybe 6, 8 pairs?
Yeah. Mm-hmm.
Okay.
Let me put it this way. It's much easier to have, because you're new to the EA,
Yeah.
new to the system, getting it dialed in. It's much easier to like really get adjusted to things, and when you have to deal with less, then feeling like all of a sudden you're over your head, or there's too many trades on, or something like that. So yeah, on a 30-minute time frame, hourly, 6 to 8 pairs. But remember, something else you can do is turn down the risk a little bit as well. Or if you did have 4 pairs and you're like, I like the way this is looking right now, you know, you could potentially do like Steven does, those 4 pairs. He leaves them on, but you know, you could have 0.4, 0.5 risk. So however you want to play it, but as probably everybody on this call by now knows, smaller is always better, because it's easier to you don't get in a hole so fast, and it's way easier to be like, oh, okay, I just need to recover some tomorrow, rather than like, damn, I got to dig myself out of this hole now and lower my lot size all at the same time. You know what I mean?
Okay, yeah. If I wanted to do the 30-minute for where I set it,
Mm-hmm.
do you think a 4-hour and a weekly to look at for overall trend, or a 4-hour daily?
I would leave it on the hourly.
Yeah.
Yeah. I mean, if you did it, it is kind of like in quarters. So then you could do a 2-hour time frame, and the same way on like with the momentum strategy, everything's multiplied by 4 basically. You could do that, but let's just look at it on, you know, the hourly. And this is why, you know, getting off this call and back testing would be awesome. Just going through and say, because I have the Bollingers here just set on 15. Now, move it to 30. I mean, it's not like you're in like a bunch less trades too, by the way. You know, I mean, you're still getting a decent amount of trades and good entries. Here would have been close. Yeah, you would have got ticked in right there. Well, we're right in the middle of the SMA, so you maybe would have wanted to stay out of that one. Here, mixed signal, this would have been a great trade. You got another one ticked in here. Here we are, we're above So we have nice push off here and we're above the 200. We're bullish, bullish, and then CCI is above the middle line. And look at that entry. You see that?
Yeah.
60 pip trade. You would have got ticked in here. Now, I bet this is Asian session. No, it's not. But more than likely, if depending on what your setting is for stop loss to entry, you would have gotten stopped it out at entry here. And, you know, it's another example. So like me personally, I'm going to have it on the 30-minute time frame. So if that helps as well, doing my analysis on the hourly. And so like, so this is a great example. Now, obviously we would have wanted to have gotten in this trade here, may not have happened, but let's see. See this would have been a prime example right there. Now, just if I put that Bollinger tighter, yeah, we wouldn't have gotten any extra entries there, but you may have gotten triggered after the trade. You would have potentially got triggered here and gotten into a little bit drawdown here as well, but depending on what your stop loss to entry, I keep the stop loss to entry like tight, like 18 pips, 20 pips. So, because I would much rather just protect it, and you know, there's always another trade. And so this is a good example of a mixed signal going on here. So ideally, you would hopefully would have caught it in time, turn it off. And I think personally, I think the 30 minutes, 6 to 8 pairs would be probably your best option. And it's what I'm going to do basically. So yeah, and so here's a great trade. Would have happened. We're above. Confirming. You know, you don't have any reason to be like, oh, we can always second guess ourselves, but that's why it's important to trade what you see, not what you think. And also, you know, not forgetting to zoom out and see the big picture of what's going on, which you would have seen, like we are kind of in a range right now, but then we bust lower again to where we are now. So like here, I think Euro New Zealand looks like an awesome opportunity because we're just now starting to cross over. So, you know, hopefully get some sort of pullback around here and then move lower. So I'm really excited. I'm really excited about this method because for me, it is the hardest part. And don't forget too, that just to share one more time, you know, we get back and confirm below this 60 EMA that's on the 15. Now, that's a good point though. If you're doing this on the 30, you might want to turn that EMA to the 30-minute time frame, right? Or leave it on, you know, 15 and just have it faster. I guess if it was a 15-minute time frame that was on 60 and 30, you would just turn this to make it a. So many ways to do it for sure. Turn that on to, you know, that actually makes a lot of sense. Have it 30 EMA and you're on taking trades on the 30-minute time frame. And now just to go to like, you know, what if we did go to 2 hour, turn that to 8. This would definitely keep you in the trends longer. So you can see if you had it on, I mean, I actually too like the 90-minute, which is just kind of like a, not quite an hourly, not quite a 2 hour. So, you know, obviously, bro, whatever works for you, you know, but it's much better to stay in these trends than constantly going in and going out and looking for the most ideal setup. So, I mean, you know, kind of actually like looking at it on a 90-minute or 2 hour time frame. And somebody like you know, you have a job, you know, that like, you know, somebody, you have to do some contracting work or something in the middle of the day, maybe the 2 hour would be more ideal, because you can know that, you know, plan your day about, you know, when you would have to change the biases. And also with the amount of pairs you trade. I mean, that there's also that.
Yeah.
Yeah, but hopefully this helps, you know. Pete, does this help you at all, or Valentine?
Yeah, definitely. I had a quick question, Clay. Setting for the CCI again, can you just do, what is that? Is it, did you say it was 160?
160.
Okay.
So, I mean, and it's almost makes it pretty similar to an RSI, but the CCI is pretty, I think it's a little more reactive, and it really shows like you don't get too much up and down. Like when it hits the top, more than likely it's on a journey back down to the bottom. It just takes a while, you know. So like this being a 90-minute time frame, you know, you know that, okay, well, I'm above the 200. It says, you know, has bearish here in the trend, but bearish. You see how we get triggered here, which could have potentially been a stop loss. And if you were like waiting for that multiple confirmation, plus the CCI is still up above the center line, it's like, I don't know, a little, you know, might be too many mixed signals.
And the super trend you just added to the chart from the indicators, that is an hourly, right?
Yes, but it's the one that looks like there's a couple different ones.
Yeah, I remember you telling me.
Yeah. So, and so, yeah, here we are above, below 200, confirming, right? So all I'm really trying to do is look for, it's like, well, where do we have multiple confirmations here? And this would have been like, so, I mean, Corey, you made a good point there for the slowing it down, and this is your entry. And it also is going to create an opportunity. Now you may have gotten taken out at entry right here with that candle, but yeah, so I've been going back, doing a bit of back testing this weekend, and really like what I see here with it. This is a good example of, well, you know, you get this bearishness, but keeping in mind, you know, where's that EMA, because you want to kind of be like right underneath it here. That would have been a just sick entry. Cross the middle Bollinger, right? So remember that, depending on what your take profit is it 40, 50. If you're super bearish across multiple time frames, it might be a good idea to use the trailing stop function on the EA too. But here you would have crossed back the center line, hopefully taking profits, and then boom, gotten ticked in again. And that would have been, you know, 2 back to back, and then right here, even though we crossed back above the moving average. Now, if we cross back above and start to drift upwards against it, then you might want to consider, you know, getting out of the trade early. You don't, because that's one of the hard parts is like, when do I get in? When do I get out? So also that, so that should hopefully solve that problem a little bit. And so it's just, and what I would do and what I'm doing for myself haven't made it yet, I'll make it available to you all. Just simple checklist, 200 trend, momentum. And then if all of these are like just ticked, it's like, engage. If not, and the opportunity is going to be there, at least among like 2 or 3 pairs, or if you're looking at 8 pairs, 6 pairs, all you need is one that's going to be in a trend over a couple days, and you're going to stack up some massive profits. And also the risk is going to be very, very, very minimal and should keep you well within the risk management parameters for your challenge. So it's going to be a good week to test this out too, with Thanksgiving and everything too, and maybe just to kind of learn it. And low volatility on Wednesday afternoon, and not like you have many trades triggered in, but just seeing it as the market's moving live is going to be, I think, pretty effective. And you could tighten the Bollingers, make it so trades do get triggered in. The spreads are going to be bigger though. So, but yeah, it's going to be an exciting week. I looking at this all weekend. It was really pumped to share, and I think these group weekly outlook videos are fun too. So I'll start to do more of these when I can. So yeah, anybody have anything else to add?
No, I liked it. It was informative. Thanks. I'm gonna kind of study right now for another hour or 2.
Perfect. Yeah, and I'll upload the recording, and just remember, just multiple confirmations. You already know the momentum strategy, obviously 200, and then now just setting up the EA to just get that risk. It's all about the risk to reward for sure, and just and more being prudent about the trades rather than because we know that we know it'll go full blast, so you got to be careful about that, but easing your way into it. And then hopefully what my intention and Steven's was too is this really give you a little more direction as well. So yeah, awesome stuff. It's going to be a game changer, and I'm excited to see how it pans out. Feel free to share any of the charts in the elite chat too, of hey, this looks like a great sell bias for EJ. What do you think? Or send me a message if you want to. It'll take a little bit longer to get back, but my messages are pretty free right now, so feel free to send those over.
Excellent. Thank you.
Yeah. So it's going to be a good week. Thanksgiving, and we won't have a call Thursday, but so yeah. Pete, you going to New York for Thanksgiving? What are you doing? Staying in Cincinnati?
Yeah, I am actually headed to New York tomorrow morning.
Oh, okay. Nice. Well, cool. Yeah, safe travels up there. Valentine, Corey, what do you Canada, you do it, y'all, you gonna still do Thanksgiving or anything like that?
Yeah, well, ours is not on the same day as yours.
Okay.
Yours is later than ours.
Oh, all right, nice. When did you have it?
Ours was about 10 days ago or so, I think.
Oh, okay, cool. Did you have a good one?
Yeah, just small, me and the kids.
Perfect.
Just our little family.
Nice, brother. Well, sweet. All right, everybody. Well, thanks for hopping on. I appreciate y'all. And I will talk to you later. See you in the group. Let me know if you have any questions. And I think this is going to be really helpful. So I'll post.
Sorry, Clay. Hi, hello.
Hey, what's up, Valentine?
Hi, you okay?
Yeah, I'm good, man.
Good. I just wanted a small little question, just to clarify. With the EA, I just wanted to know when the trade actually gets triggered. So say it touches the upper or the lower Bollinger. Is it when it actually touches the middle one, when the trade starts?
No. So it'll start when it touches. So if you have it on sells only, it would take a trade when it hits the top Bollingers, right?
Yes.
It would take a short position. Now the center line, the thing about the center line is it won't take another trade on that in that same direction unless it crosses the center line and then comes back.
Oh, okay. Oh, that makes sense. Yeah, I just wanted to clarify.
Yeah. No, great, good question. So,
yeah,
but yeah, because otherwise it would be like well, a free for all, you know, so that's like a, you know, a good mechanism too. And so yeah, good question. Good to see you on here, bro.
Yeah, oh no, it's good to be on. Yeah, I'm usually on night shifts and my balance is a bit not the normal balance. So but at least I saw the messages and I've been off a few days. So
it's all good. It's all good.
Yeah, I've been on the London sessions quite often with Angelo.
Cool. Yeah, that's what he said. That's what he said. And you're enjoying this?
Yeah. Oh, definitely. Yeah, definitely.
Awesome.
Yeah, it's nice. Yeah, we're just absorbing all this wonderful knowledge.
Hey, it's a lot, but it's better. It's better than the flip side where you're like, okay, what's going on here? Yeah. So no, it's good. So
yeah, no, it's nice. It's nice.
Glad
yeah,
you could hop on, man. And Pete, safe travels up to New York. I guess yeah, I think my buddy posted a picture. I think it's like they got some snow up there or something. Did they?
Northern New York. I'm like right outside the city. Yeah. So
okay, gotcha.
Thankfully they haven't had snow yet.
Yeah. Well, cool guys. Thanks for hopping on. I'll talk to you in the chat and see you on Tuesday. We'll do the call as normal too. So
thanks, Clay.
all right, guys.
Take care. Thank you.
Bye.
Cheers.